Good morning. My name is Scott Redler, Chief Strategic Officer of T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call Express. So futures are pointing to a higher open this morning, picking up where we left off last week, where we saw lots of opportunities to get long. We could have picked up on a lot of clues here along the way. So at this point, Scott, where can we still find opportunities?
Well, this is going to be a lot more stock specific. We have earnings that are going to start every single day, so you have to really know where your stocks came from, what the expectations are, and how they react. As far as the macro move, you look at the chart here of the SPX, you will see that you already had your calculated entries. Here is when we took back the 100-day. This is when we digested during, July 4th week, closed above the 50-day, and from there, it's been 6-7 up days all the way back to 1687. Okay, so right now, the oscillators are more overbought than we've seen for the entire year. So that makes it very hard to initiate new longs after a move like we've seen. But if you've been trying to short this thing, you're under pain. And if we take out 1687 and close above, that pain trade continues.
And earnings from banks helped lead the way. We saw Wells Fargo do slightly better than JP Morgan. Today we have Citigroup. We'll have to see if the banks can continue their run.
And this kind of shows you the specificness of the tape moving forward. You look at the XLF, you'll see, here we are at new highs of 2013, but then you look at a name like Wells Fargo. Wells Fargo, it took it in stride. I think it's only a matter of time before it takes out 43. I think you stay with it. JP Morgan, though, on Friday gapped up and went red. Okay, but again, all the bears were saying, oh, it's a sell now, it's a sell now. You know what? It's still above the 8-day, it's still above the 21-day. I think the longer we stay above this, only a matter of time for this to take out highs. Citigroup reports this morning. I kind of think it's going to be positive, but look how this is only midway of the range, so I don't think it needs a blockbuster to take it back here. If these things were trading at highs, it needs a blockbuster to continue. When you're in the middle of the range, it could be a little bit of a buying opportunity, so we'll see the way Citi reacts this morning.
And the retail sector helped to lead the market up as well, with the RTH continuing to make new highs.
Yeah, and then you look at ETF like this, it's hard to enter. You look at the RTHs, which is the one that we follow, it's already, this was your day to enter, and then you had follow through, follow through, follow through, follow through, opening up, extended. So I don't care, how strong a group is, especially with the ETF, you don't buy something this extended. You figure out why you missed it the last time. Lots of great acting stocks within there. You got Target, near highs looking pretty good. You have Walmart that is still middle range on its way up. Last week we talked about TJ Maxx, which, at highs, Gap, you name it, just shows you that, you could pick and choose your spots, but overall, it's been much better to be a buyer than looking for cute shores or even avoiding.
And over in tech, last time you and I talked, we talked about names showing relative strength, names like Google, Amazon, Tesla, all continuing to power through.
Well, as a trader, you have a set of rules. During corrective activity or corrective periods, you want to look at what holds up best. And we pounded the table. Brittany hasn't been here. She had a very nice vacation. And we talked about, I'm like, what were the last few names that we talked about that were showing relative strength? And she named these 5. Boom, look at Amazon, okay? Right here, you had an entry at 272, 285 at new highs. It showed relative strength, holding above the moving averages. Then look at something like Google. It also, not quite extended yet, but this still looks good. Earnings are out Thursday. Let's see if it can continue up. Then you have something like Netflix, Sperling's Play of the Week. We don't want to keep touting it, but we want to show you can time these things. This was a buy point at like 229, 235, and now here we go. And lastly, look at Tesla, something we've been pounding the pavement on as an innovative new company. We love Elon Musk, following the 21-day all the way up, breakout 1, breakout 2, and then into getting added to the NASDAQ 100. It's above 130, and it's probably time to trim in shells. It's very extended, but overall, lots to like in the equity field.
Yeah, and gold was getting some attention last week, grinding higher, trying to reclaim the 21-day. Where's the trade there, you think? Well,
this just shows you that if you avoid very bearish trends and you're not stuck in it, you could always look for opportunity. And if you remember that Thursday, Friday, when finally it seemed like there was enough blood in the street in the metals, you look at gold here, you'll see there was an outside day. That outside day occurred right here. That was on, 628 when it traded below, came back above, edged up, put in a higher low. I know this wasn't the easiest thing to deal with, but if you said my stop will be at the low here, you held in. It's been going higher. I'd say the longer it stays above 122, the higher the probability you get another trade to fill this gap up to about 130.
Well, we have lots more to talk about, so join us for the long version.